Hello, good evening, good afternoon, good morning for those of you joining us from the US, and a very good night. I hope you are sleeping for those of you joining us all the way from over in Australia. Hello everyone, welcome. Today is going to be a great lesson, our first lesson in quite a while. If I could simply just remember, I accidentally switched off my shortcut toolbar, and then I always spend a few minutes fumbling around trying to find it again. There we go. It's right there. So today's lesson is going to be about a subject that a lot of you have seen mentioned in various places. Lots of people putting them in their charts and saying, yeah, but this fib, but that fib, but this, but that, but all of this crazy stuff. And trying to find somewhere that actually holistically, and that's the key word, holistically covers what the Fibonacci retracement tool is and its twin, the Fibonacci extension tool, how to use them, and how to actually utilize them to determine buy, sell, and see where the market is going. So personally for me, when I first came into the Fib tool, I had to go and check out a bunch of videos and read a bunch of stuff, and I was like, you know what, there's something missing. And there was indeed something missing. And what was missing were simple instructions on how to use it, when to use it, and how to determine what the market is going to do based on what you see. So this here is Techie's Guide to Fibonacci Retracement and Extension Tool. What is Fibonacci? Fibonacci is actually, well, this is Mr. Fibonacci. I'm sure there's a picture of him. Fibonacci. Why did I put double B? Here's Mr. Fibonacci. Apparently that's what he used to look like. I don't know. To me, he doesn't really look like him. He's Italian, hence the name Fibonacci. And essentially, he discovered a pattern within numbers, and this pattern within numbers can be found everywhere. What do I mean by everywhere? I mean, you can find it everywhere. You can look into seashells. You can look into flowers. You can look into no, don't look at that. That's ridiculous. Don't look at that. Just ignore it. You can look at Sonic. You can look at so many things that exist within nature, as well as man-made objects that actually have the Fibonacci sequence of numbers within it. What is the Fibonacci sequence of numbers? It's very simple. Okay, let's do this. I believe in giving you guys a holistic lesson. The Fibonacci sequence is essentially this. You start off with the number 1. Okay, that's your first number. And then what you do is you take, sorry, you do, well, we'll do 1 plus 1. Okay. That there is equal to 2, correct? And then you take the 2 and you add it to the previous number, okay, which is equal to 3. 3 plus the previous number of 2 equals 5. 5 plus 3 equals, wait, I'm going crazy here. That should be 2. And then it equals to 5. 5 plus 3, that is equal to 8. 8 plus 5 equals to 13, etc., etc. And you keep on going down like this. And essentially, in mathematics, what you end up generating is you end up generating this curve here. That is what the Fibonacci sequence of numbers are. And you can see them here. You just continue to add, and you continue to get larger and larger and larger and larger. Why is it used in trading? And what the hell has it got to do with us in crypto? These numbers are called the golden ratio. Okay, as I mentioned, you can see it, you can find it everywhere in anything that has a pattern. Okay, I'm not going to say you can find it in anything, but anything that has a pattern, you can generally find a Fibonacci pattern that matches up with it, including charts. And in technical analysis, it's all about patterns. So this is why we can utilize Fibonacci within here, because there are patterns that emerge, okay, when the chart is moving. And therefore, somebody many years ago, I believe a long time ago, discovered that you can utilize the Fibonacci ranges, the Fibonacci numbers, to essentially find new levels of support and resistance, or levels where the trend may in fact change. So we have two tools. Everybody always talks about Fibonacci retracement. Okay, in fact, what I'm going to do, guys, I'm just going to go over to a blank part of the screen. Okay, so we have nothing there to disrupt us. This is Fibonacci retracement. Now, when you come onto TradingView and you put in Fibonacci retracement, this here is what you will see. Okay, now, how and what the hell do all of these colors mean? The first thing is, personally, and this is just personal preference for me, I like to come into here and I like to turn off the background. I like just the raw lines, okay? Because when you're trying to filter through the background and trying to look at the candles that are behind it, it gets a little bit annoying, okay? This is the first tool. This is Fibonacci Retracement. So if we take right now, let's take this and let's put onto the end of it, let's put onto the end of the right an arrow, okay? And we're going to make this one here right now just blue. So imagine that you're looking at the charts and you're coming up like this, okay? And then you start to come back down here. And then the chart carries on up, right? That's how a chart goes. It goes up, it goes down a bit, up, down a bit, up, down a bit. Generally, this here would be in a bullish market, or it would be in a bullish trend. Now, utilizing Fibonacci retracement, you can calculate how far down you can be expected to reach. Okay, it's the retracement. It shows you once you have made a major move, how far you can retrace before you can be expected to continue to move up. Now, how do you apply the Fibonacci retracement? The Fibonacci retracement is very simple. You have 2 points. You click on one, you click on a second, and you're done. That's all it is. It's that simple. Where do you apply it? On an uptrend. This is a key thing, guys, okay? A lot of people never talk about this, and you don't really find it in a lot of tutorials. If you are on an uptrend, your Fibonacci retracement is done from... Hold on, I'm confusing myself now. If you are on an uptrend, it is done from the bottom to the top, and that is it. Now, you can choose to click exactly where the top is. However, then you see that the lines end here. So what I like to do is I like to just drag it out a little bit further along, okay? And there you go, okay? Or as Mario says, you follow the trend. If the trend is going up, you start from the bottom and you go towards the top. Now, what do all of these numbers mean, and what the hell has this got to do with Fibonacci? Well, these here are actually the Fibonacci numbers. Apart from, well, we won't comment on this one for now. But essentially, these here are the Fibonacci numbers. This here is 1, okay? And this here is 0, and the fractions that come within that. Or, some people like to call them percentages. 61.8%, 78.6%, 38.2%. So if someone says percentage, you just know then that you just got to take this section here, which again, this is 38.2% of 1, which is why it's 0.382. Okay, so you have now done a Fibonacci retracement on an uptrend, okay, by starting at the bottom, moving up to the top, extending it out so you can see it a little bit clearer. And as you can see here, just by chance, guys, okay, Kefir saying format option allows infinitely extended lines. Yep, it does. If you come here, you can go to extended lines and it just makes them a little bit longer. However, I will comment on this a little bit later when we come to actually put this into effect and we come to do it. I will explain to you guys why I personally, and again, this is down to personal taste, guys. You may like the background on there, okay? You may decide to flip up some of the colors. You may decide that you want to make some of the lines really thick, or, you know, in fact, dotted lines or whatever you want, and go through and mess around with this and find your own personal preference, okay? Personally, for me, I don't use the extended lines because then further down in the chart, I can start to get interruptions where I've done another Fibonacci retracement, and then I'm like, wait, which line is this one from? Who is this guy from? Etc. etc. So I personally don't do that. You can also flip the labels around to have them in the center. Let's undo extended lines, and you can see they're now in the center. You can also have them on the right hand side if that's what you prefer. Again, I like to leave them in the standard position. Okay. There was another, you can actually put it on percentages. There you go. If you want to put it on percentages, you can put it on percentages as well. You get the same digits there. There was another option, which I cannot remember where it is, so I may have to discuss that a little bit later. But there was an option, we can ignore it for now. Let's go over the key things. This here is a separate chart. It's separate away from my normal tools and stuff, and I had to reset everything just to be able to show you guys how to go through it. So essentially what we can see here, we started from the bottom, we went up to the top. Now, where do you know where the top is? The top is where there's a trend change. So here we can clearly see that we came up to the top and we started to come down. Now we want to work out how far down we're going to go. All right, we only know up to this point here. So we don't know where this guy is. Okay, and this dude just started up here. Normally, generally, as a mass amount in the actual retracement on an uptrend, you can expect the majority of the time to come down towards the 382. Okay, you can come down towards the 382. Or you can also come down towards the 618. Now, why am I mentioning these two numbers? These two numbers are the core numbers, because when you have a large trend, this is going to, let's delete this actually, and let's use, where's the other magical tool that I was using a couple of days ago? Not a fib channel. We want to find a, yeah, we can do a parallel channel, I think. Okay, so imagine that you are currently in an upward channel moving like this, and let's just get rid of the background a bit. Okay, so these purple lines here are your current channel, i.e. where you're going up. All right, this is your channel, this is where you are heading. Or in fact, this could even come down a little bit like that. So you are generally in an uptrend. In actual fact, around 80% of the time it will retrace down to the 618. Most of the time it will definitely go down to the 382, okay? But a lot of the time it will go past the 382 down to the 618. This is on an uptrend, okay? So we drew the uptrend, that's your uptrend. So how does Fibonacci help you work out what you can do? Well, if you came up here, if you had a coin or an asset or a potato and you wanted to actually go through and sell it and rebuy it again, i.e. short it slightly when it reached the top, okay, or you're looking for an entry position and you want to know where the bottom may potentially be in order for you to enter the coin, you do your Fibonacci retracement tool at the trend change and you watch. You watch at the 382 and you see, did we actually have the reversal at the... Okay, my mouse seems to not want to be clicking today. Did we have the reversal here at the 382, or did we actually come back down towards the 618 and then take off? Those are the two key points that you want to have a look out for, okay, when you're deciding when to enter, when to buy. How does it work then when you're, remember, this is for an uptrend. This is when you're in a bullish market or a bullish channel. Now, let's go down the other way. We start from the top here. We come down here, we're going to have a slight retracement. Again, these are just freehand lines, guys. I'm not really expecting these lines to match up with anything. If they do match up, it is simply by chance, okay? So now we are in a downtrend. So how do we start with the Fibonacci retracement tool? You start at the top, down to the bottom, and you come across like that. And you guys can see, this is the thing, okay? Once you've been doing crypto and you stare at charts for 18 hours a day for a few months, you can start to actually just draw random lines and reach approximate fib levels, okay? So even though I drew this freehand, it approximately reached the 382. And again, the same thing applies. You drew your chart, you met with the bottom, you saw the retracement come up to the 382, and then continue downwards. Now, why am I mentioning the 382 a lot? Because a lot of people believe it always goes up to the 618, but it doesn't. It doesn't, and the 382 is a bigger number that you have to watch out for. If you are simply waiting for the 618, and it doesn't actually even get anywhere close to there, you're going to be missing out on opportunities. So a lot of people, when they say layer your buys between the fibs, Essentially what they are talking about is they're talking about, I have it up here. No, I don't have it up there. Again, weird toolbar, things are missed out. Essentially your buy area should be within here, okay? That there should be, sorry, this here should be your sell area since it's coming down. You don't want to be buying in there and then it drops, okay? Unless you're shorting. If you're going to short, this is where you want to short. You want to short within here. However, you should ideally have smaller zones between here, okay? And then again up here, which is why sometimes you see people, quite often, they will have two zones, two boxes in their graphs, okay, which show approximate zones, buy or sell zones. And essentially what you'll do is you'll buy or sell some here, okay? And you will watch and you will see if it continues to retrace and continues to go up, then you will sell more up here. However, if it does continue to go down, then you essentially sell the remainder of your assets that you wish to sell. So we said this here is about Fibonacci retracement, okay, as well as Fibonacci extension. Not many people ever talk about Fibonacci extension, and it's just as valuable. You can utilize it. It is just as valuable. How do you use the Fibonacci extension? Okay, so let's go back now. We're going to start again with our uptrend. Okay, we came up here. I'm going to do in the Fibonacci retracement tool just to get it nice and accurate for you guys. We came down, we bounced off the 382. Now we want to know where it can go. Okay, that's what we want to know, right? Where's this line going to go? Where is this dude here going to end up going? Is he going to go all the way up to here? Or is he only going to come down to here? Or is he going to stop here? You know, how high is this asset, or how high is this coin or potato if you're trading potatoes? How high is this going to go? And that there is where the Fibonacci extension comes in. How do you use the Fibonacci extension? This here is the Fibonacci retracement. That's its logo there. And you come here to the toolbar, third one from the top, and in here you have your Fibonacci retracement, and directly below trend-based Fibonacci extension. Okay, that's its logo up there. I've got to add it to my shortcut bar. How do you do this? You start at the bottom. Again, it's an uptrend. Start at the bottom, up to the top. But then this whole thing's moving around. You're like, well, what do I do? What you do is you see the zero line that's moving. I wish I could, like, just here where it says 0. That 0 line, you want to line it up with your bottom point. Okay, so that 0, you want to line it up with your bottom point, and the 1 should kind of line up with your top point, or it should be your top point up there. Again, this guy here is a little bit, it's got too many colors and stuff. Actually, what you might need to do, I believe, if I'm not mistaken, that I believe this is how it comes as stock. This is not stock, it's not a modified car. This is how it comes as standard, okay? That you have only 1 and then 1.618. So what you do is you come in, you come to just any point, select it, edit, add in 1.272 and 1.414. And as for me, personal preference, I don't like the backgrounds there, okay? And because I have Fibonacci retracement and also the Fibonacci extension on, I like to make my extension lines dashed. Okay, just that then I don't confuse them too much with the rest of the stuff on my chart. And then I click OK. So, in general, where does it go? The most common place by far, okay, across assets, I'm saying across assets, whether it's crypto, whether it's anything else, whether it's gold, whether you're trading Forex, whether you're trading stocks, is it comes up to the 1.272. That there is by far the most common area that you can come to. Where else can it go? It can also come up to the 1.414. Okay, not as often, And we'll go through, guys, and we're going to do some real life examples, and we're going to explain things, and we're going to go through and teach everything, and we're going to check it out. Okay, this is not just theory. We're actually going to put it into practice. We're going to go back a little bit in the history of Bitcoin, and we're going to check it out. It could also come up to the 1.618, which is significantly rarer. Okay, but it does also happen. And if anyone's doing Elliott waves, you'll say, oh, that's just simply a 1, 2, 3, or an A, B, C, or whatever it may be. Okay, so now that you guys have seen this, obviously, no point in doing it. It's the reverse if you're in a downtrend. Okay, or maybe there is a point in doing it actually. Let's get this guy, that guy. Okay, we can start with a downtrend, and then we have a slight retracement, and then we come back down again if my tools want to work. Okay, and again you can apply the same thing here. You can go from your high point, since you're going down, to your bottom point, line this one here up with the 0 point there. Luckily it draws a nice dotted line all the way across. Okay, so you can come through and you can do that. Just click, and then you can work out where approximately you may go. Usually on the downtrend, I will say the 618 is more common than the 1272. Okay, especially with crypto and especially on Bitcoin. Okay, you usually have that significantly more, and you can go through and you can fine tune these all to your heart's content. So let's remove all these guys. Now let's go back in time. Let's choose a random point. I don't want to do it here, guys, because here there's a lot of pumps and dumps. Okay, and it kind of messes things up just a little bit. And I want you guys to see an actual proper example of how to utilize these tools and how to kind of really develop them. And I would suggest that you guys also go back in time. Don't try and do it right now. Choose a nice period like this. Okay, over here we have a very clear, if I can ever remember which one has it, I am sure. Oh, it's always in here, isn't it? And we will add a parallel channel. Okay, so essentially here what we have is we have a nice channel like this. Okay, you guys can see here, this here is an upward channel, correct? And we want to work out where Bitcoin is going. I don't even know what the date here is, so I'm looking at around the 28th of February, so the end of February, the beginning of March. Let's have a look at what is happening. So let's zoom in a little bit closer here. I'm on the 15-minute. Generally, the higher the time frame, you can get nicer results with things. So right now, we had, I'm not going to go through and do each and every single one of these. When you're on the 15-minute, you want to look at the general trend. So for here, for example, you can see there that we have a nice trend coming up there, correct? Now, we want to see how far down this can retrace. Let's delete that. Let's come in here. We choose the bottom. Again, we come down here. We choose the bottom, right up to the top there, okay? And that there is our Fibonacci retracement. So once we came in here, you could essentially continue to move this up because you don't know that this here is going to actually be the top. You're not going to know it's the top till you don't have a higher high. This here is a lower high, i.e. the high reached a lower price. Okay, so you could start down here because you believe that that's it, we're going down, and you could monitor that. But as soon as you see that we continue up, you move it up to that point there. And I think there was a question there. Is the proper way to draw fibs off the wick or where the actual top of the candle is? That's a very good question. For Bitcoins, on big exchanges, you can use the wick, but just be a little bit cautious of it. You may have to readjust sometimes if there's only one wick that came above. Okay, you may have to readjust just to find the correct fib level. For example, especially if you have just like this peak here, I wouldn't technically take that wick there. I would just take it from the top of that candle, because that there is absolute highest point and there was a massive pump before it. And when there's massive pumps, that's when you get big wicks that mess up technical analysis. Okay, so yeah, this is for here. We had steady growth. You can see there's a lot of points where we tried to break through multiple points and we reached the top, so I will utilize the wick. at the wicks here. On lower volume coins, it's a lot easier to get massive wicks. It's a lot easier to get massive movements, especially on the bigger time frames. So then you don't utilize the wicks. So in this example here that we're taking right now, all right, let me just quickly go through and check in the other questions. Sometimes when there are a few wicks, I like taking kind of the average of the wicks, even on BTC. On BTC, you should go for the wick. Isn't the alt top 3-5 wicks? It's the coin at the top. Volume of the day, wicks. If it's a shit coin, poor volume, no wicks. Also draw them on the daily and then go back on the 1 hour, whatever time frame you work on. Yep, it's until 1 mil. Oh, he's actually on here. Hello, Until. I'm not sure if he has his microphone unlocked. How are you? Didn't realize you were here.
I'm good. Yeah, I saw you alone and I thought I'm just gonna keep him company, but continue, you're doing good.
Thank you. Yeah, so over here I'm utilizing the wicks. As I said, it's personal, well, it's not really personal preference. It's actually proper technical analysis. On higher volume things you should use the wicks, but what I learned from Mr. Until 1 mil is that on lower volume coins, where it's very easy to get a wick for no reason, you just cut out the wicks and just measure without wicks and maintain that across. So don't come down here and take out the wick and then up there leave in the wick and assume that's going to give you correct numbers and readings. If you go for wicks, you go for wicks the full way. So here we came in out to the top. We put our top there. As I mentioned, if you had believed that was the top, you could have put it there. Once you see that we are actually not retracing, then you move it up to a point. And here we can confirm we failed to come back higher. We had a lower high and the trend started to reverse. Now, as I mentioned, that there, and then we started to come down. Where did we reach to? As you can see here, we reached to the 382. All right. And as I mentioned, you can usually have two separate boxes. Okay. Two separate buy zones of potential places where you could buy. Then here you would have been glad that you bought because it continued to go back up. Now we wanted to see how far up it could actually go, correct? Well, we can utilize the same thing. We're going to go through now with a Fib extension. We're going to take from the same bottom there to the same top here. Going to come back down. We're going to line this guy up with our 0 point or our bottom. Yeah, okay, we're going to have to, let's drag this guy here out just a little bit. Okay. There we go. And as you can see here, we came up and we just came around the 1272 before yet again we had. So we managed to call this one off. We bought in here and we rode it up. Even if we sold here, even if we sold just around here, okay, we would have been in a trade for this period here. We would have sold before there was another trend reversal coming down to here. All right, so this here is just a random point on Bitcoin, and you can do this on almost any coin, on almost any alt. Again, you can do this, and what you do is essentially, this is why I don't like the extensions to keep on going on. Personally, I don't like them to be extended across the screen, because then when I come to here, I gotta remember to go back and delete those ones. But you can continue to do this. Now, what is a key thing to learn from this, and how can you utilize it for other than knowing just the extension and just the retracement? This here is a magical point. Why? Because in this section here, we had a major trend reversal. Could you have seen this? Could you have spotted this by utilizing the Fibonacci retracement and the Fibonacci extension? Yes, it could have assisted you in noticing this a little bit earlier. How? Quite simply, okay? We here, let's draw in the trend lines, okay? So we came from the top here and we reached down here. So we would have been expecting then to come and retrace back up to approximately here. Again, I'm just doing rough lines now. They may not actually be correct. So if we take from top here to bottom there, oops, I am currently so no, we are actually on an uptrend, so I don't know why I'm doing that. Again, we're in an upward channel. Okay, let's go for the Fib retracement. Okay, so if we take Fib retracement from the base point here up to that point there, okay, we can see that we came back down to the 382. So we came essentially, you can count it from here if you wish, and if my lines decide to work today, we came up, we came back down, we would have drawn a Fibonacci based Fib extension. Okay, so we would have come from here up to the top there, come across to the 0, and we see that we failed to reach the 1272. Now, we failed to reach the 1272, and we actually went lower than our previous point. And you can see that when we went, you could have done mini fibs over here and continued fib within fib, within fib, within fib, fibception, as I think some people like to call it, okay? But we failed. And when you fail and you retrace back down before even reaching the 1272, for me personally, that's like, huh. I gotta watch my ass right now. Because unless we can start to come back up here, and you are already in an uptrend, there is big potential for you to have a trend reversal. I.e., you're in uptrend, you're gonna start to go down. And as you guys can see here, that's the story of Bitcoin's life. It failed to break the 1272, and as a result, then we ended up going down. Okay. So these here are the Fibonacci retracement tools, and while I know that a lot of people utilize them, I think a lot of people don't use the Fib extension enough, and they don't utilize them on their charts. Thank you very much, Until 1 Mil. Thank you for joining in. Until 1 Mil's got to go. People don't utilize them enough or utilize them fully. Now, I just drew this here on the 15-minute, and I could accurately, within a degree, you know, nothing is ever accurate. This is not rubbing a crystal ball and kind of getting a magical answer coming out of it. But within a certain amount of accuracy, you could see where you were going to go. And also you could accurately, to within a certain degree, be on alert for a trend change. Okay? So, I'm going to go through now and check out questions. Brandon Park says, for your Fib extension you just drew, isn't the 0 supposed to line up with the original Fib 0? You don't need to. When you're actually using the Fib extension, you don't need to technically line it up with another Fib. Okay, so for example, I can take from here, and I can go up to there, and essentially you just need to line it up with the lowest point of where you are, because it does within, to a certain degree, fill in a Fib for you here. Okay, so you don't technically then need to you don't need to directly actually have another Fib there, and the 0 there is lined up with the 0 here. So if we zoom in, again, I'm just doing this very rough, guys, and you can get as accurate as you want. Okay, so as you can see here, lined up with the bottom of there, slightly off, so then you could technically come in if you really wish and just bring it up ever so slightly there. Okay, and then you can come down and you can see that it's lined up with the bottom of the wick. Okay, Fib extension equals Fib retracement plus extension. Yes, it does. However, when doing the Fib retracement, it's a simple 2-point system. Okay, okay, that was a bit of a pain. I wanted to just move up a bit. Fib extension is a simple 2-point system. Just click, click, done. Personally, for me as well, what I like to do for the Fib extension, I like to actually turn off these points, because usually I already have a more accurate Fib already there. And then I only have the 0 point, the 1 point, and then I have very clear extension of what is my extension and what isn't my extension. And I can clearly see this is my fib, this is my extension, and I know this guy here is super accurate because I got him point to point, and then I know this guy here is accurate as an extension because again I got him point to point. A lot easier to work with. The issue with utilizing the fib extension, okay, because it's a 3-point or a 3-click system, for example there to there, is that actually then coming back down, sometimes people may misclick, and as you can see, if you look at the top there, okay, some people may actually misclick and move it down slightly, move it up slightly, and because it's ratio-based mathematics, it actually makes a big difference. Okay, if you move this down to here accidentally because you're basing it off of another line that was drawn from another fib, from another something, it's going to throw off all of your calculations, it's going to throw off everything. One hint that I would like to share with you guys is this. When you use the Fibonacci retracement or the Fibonacci extension, in the brackets next to the Fibonacci numbers is the actual price. So here it says 10,817, which is exactly where we are. And if I hover over there, you can see, if I can get it perfect, you can see that that is where you are. So it actually also indicates to you directly the price, okay? And I believe that you can also switch off the prices if you do not like the prices. For me, it's super handy just to be able to glance across and be like, ah, yeah, okay, that's that. I don't need to keep on looking back, drawing extra lines. You know, some people, I've actually seen someone, and I sent them a very nice message, and they had their charts like this, and essentially then what they would have is they would have lines like this coming in, and they'd be like, okay, that one there, and then I'm going to add another one here. I said to them, why have you got these lines? And they're like, well, so that, and then I can see, and it shows up the price on the right hand side. You know, then when I put in this line, it shows me what price it is. And they weren't, for some reason, maybe they had switched it off accidentally, but they weren't aware that you have the price directly here if you just tick this prices thing, and it saves you having to draw extra lines. So a good comment that Until 1 Mil made, okay? The higher the time frame, you can get some beautiful Fibonacci results, okay? You genuinely can, and you can utilize this tool on almost any time frame. I wouldn't recommend going down to the 3 minutes with it. Personally, doesn't really make sense to go all the way down to the 3 minutes. 15 minutes, it's a great usage of the tool. You could even come here right now, and again, very rough. I'm going to take this to the top there. Again, you can see that here, hit that magical 382 level, slightly a bit lower than the 382, okay? But then one key thing that could have told people that we were going to have a major trend reversal here was that then if you took the extension tool, okay, and you came back down, let's go just to there. I want to try and get it as accurate as possible. And if we come across with this here, then you can see that we didn't even make it back up to our previous point here, okay? And that there was a very, very clear sign that, you know what, shit gonna hit the fan, okay? So this here, ladies and gentlemen, is how you use the Fibonacci retracement and extension tool. I hope that you guys now have a full understanding of how it is used, of how it can be used, and the great features of it, and how it can actually help you to predict buy points, sell points, long points, short points, pointy points, and blunt points as well. So if anyone has any questions, please prepare to write them in now. I'm just going to read now. Yeah, I think I read those ones there, and I'm going to go and check right now on the Discord server. And here, there we go. Okay, yep, okay, I don't see any questions. Kefir saying, rewatching from the start, recommended. He pointed out some stuff I hadn't caught on to yet. Yeah, guys, this is the thing. As I mentioned earlier, when I went out looking for a video or something on how to use the Fibonacci tool, literally, I came across one tutorial video where the guy had like a section like this open here. Let me come. Okay, he had a section essentially. Okay, this is what he had on his screen. Okay, and he literally came in and he said, yep, to use the Fibonacci retracement, you come in and you go click, click, He didn't even say click. He was just clicking like that. And he was like, yep. And then you can see that it's going to retrace to this point here. And that's it. And blah, blah, blah. And then just literally just kept on doing that multiple times on the chart. And he's like, yeah, look, it reached down here. And then, yeah, look, oh, yeah, okay, yeah, look, we reached that. And that was it. And that kind of, you know, if you're going to use a tool, you got to understand it. All right? We are not monkeys. We are intelligent traders. We utilize things that we understand what, why, when, where, and how. And I really hope that everybody can learn that about every single one of your tools, which is why we spent so long explaining what RSI is and how the numbers are calculated, which is why I dived deep into MACD, and we really spoke deep about MACD and how it's calculated and how it's utilized and where the numbers come from and how everything goes and why one line is smooth and the other line is really bumpy. And again, the same thing now for Fibonacci retracement, because I want you guys to be able to really understand the tools that you have under your power, the tools that you have under your control, so that you can make the best charts possible. Okay, so that's it for today then, guys. I don't see any more questions. Thank you, Mario T, for the comment, and 2 coins 1 cup, and Travi Trav. Again, this is only a short, yeah, it's just a short stream. Just talking about Fibonacci retracement and Fibonacci extension. Now go out there, make as many charts as you can, practice, 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 choose a point in history over here. This here is a very nice point, okay? If you look between the 6th of February, okay, up to this point here, you can practice on your Fibonacci extension on an uptrend. And then if you want to practice on a downtrend, choose here from the 5th of March, and you can start to practice on the downtrend. Do one, then go through, do the other, check them out for both Fibonacci extension and Fibonacci retracement, practice both of them, come back, watch this video a couple of times, and then start to post up your charts. Okay, and from now on, you guys can go out and you can talk about Fibonacci retracement and Fibonacci extension, the one that nobody else really ever talks about, okay, with absolute confidence, and it's going to help you guys make much, much better trades. So from me, that's it for today. And yeah, look out for the next lesson. We'll have to see when that's going to be. And I do apologize that the lessons haven't come out so far. So go back to the beginning, and that's it. Take care, guys. We'll catch you all at another lesson.